The Nigerian government has allowed Dangote Cement to resume exports across its land borders. Now, this is one of many company news trickling in into the Nigerian equities markets today as the All-Share Index logged a second day of gains. Rotimi Fakayejo, stockbroker and capital market analyst, tells us how investors are reacting to the news. Rotimi, thank you for taking the time out to join us. What were the conversations that were had at the NSE today on the news on Dangote Cement?
Well, it's become a very cheerful one. And I think the further news we are having in that respect is that Bois Cement and also a gas company is also inclusive in that list. But let's focus on Dangote Cement. I believe strongly that we operators are of the opinion that with an increased output and a bigger market for Dangote Cement to extend the good performance they have made in the Nigerian market, I think definitely we're going to see a much larger turnover for Dangote Cement and much more profitable. And we are seeing it that Dangote Cement has come of age, that it could also be one of those stocks that will be among those that is pricing above $1. We presently have Nestle and Seplat. But I believe strongly that we will begin to have that Dangote Cement in that line on the long run. So for operators, for stockbrokers, we believe strongly that Dangote Cement has come to stay as one of those stocks that investors can actually put in their portfolio for future as a reference point, and also to boost their portfolio stability. Because of what we have seen so far in recent times, we've seen a trajectory from about 150 something to 185. That is almost close to 20%. And I think that price definitely is sustainable, except something unusual, which may affect the overall market, is what may make that price to reverse. But aside from that, I believe strongly that that company and that price has come to stay.
You know, this story around Dangote Cement, not just the recent story, just the rally that we've seen, Dangote Cement and some other large cap stocks. Some analysts could argue that this is one or two of the arguments that has made investors to see the market just away from the bond market or the fixed income market as a market where investors can come, put even more money and take even more risks. But I'm just wondering, how many are the stocks? Because if you look at the trajectory and how the market has gone up so far this year, we can see precise positioning in the banking, insurance, and the industrial stocks. I'm just wondering, how many other stocks can we point to say, oh, there's a good argument to say to investors, yes, we know there are lower yields at the fixed income markets, but of course at the equities markets, the yields are just irresistible.
Yes, I think it's going to be one of two ways for investors that may want to get into the market afresh. Remember, one aspect of it is that there's going to be a lot of focus on stocks that have good dividend yield. In these stocks, there will be sustainability of their prices. But for those other securities whose dividend yield is much lower, we may have a situation whereby profit taking may set in at a time. But even at that, definitely much later, because the markets, the good stocks available in the market is not really as many as it seems. We have over 150 stocks listed in the market, not just a little less than 100 are actively traded on a daily basis. And even among those 100, we don't have more than 50 that are actually liquid. So the investors are going to cascade down to this. But be that as it may, investors definitely are much wiser these days. And I believe that those stocks with good dividend yield, and we find a lot of them in the banking sector. The other sector, apart from the industrial goods and the banking sector, insurance that may be looked at, I think may be consumer goods. And I think a few of them are beginning to spring up, at least in a positive way, to grabbing the hearts of investors.
Okay, Rotimi, we have exactly 60 seconds left. Let me ask you this question. Did you ever imagine a time this year when we'll be talking about the All-Share Index at over 20% year-to-date return?
Well, I think if you look at the cycle in the market, We usually have a trend of maybe 2 years down or 3 years down, then another year up. A lot of things have dragged down the market this year. At a time, I believe that we could get to this level, and I'm still very optimistic that as time goes on, even before the release of financial results by next year, we may have the All-Share Index close to 35,000 basis points.